Alright, good afternoon everybody. Should be live across the board. Let's jump right in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. And there is the position disclosure. I got stopped out of that Unity swing that I tried to get in yesterday. I nibbled on a little Roku feeler with a plan to kind of build into a potentially deeper pullback. And I repurchased a little bit of Shopify after liquidating that position into the up move as it got to my target. But have a very, very small position in it right now. So those are the updates, kind of big picture there on the position disclosure. And let's talk about the market. All right, well, we had a real price correction day today. SPYs are down 1.5%. Qs are down 1.3, and IWM is down 1.5%. So I guess a little bit of outperformance from the Qs, but nothing to write home about. Not really what I was looking for. Intraday here is still up, so you can just see our price action. We had a small common gap up this morning. We had the PPI come out at 8:30 this morning, which came in really light, which is a positive thing for our inflation folks out there. The retail sales number also came in light, which is not good. You know, potentially points us more towards a recession. But I would have thought that the PPI would outweigh the retail sales number and help us hold up a little bit, which we did in the beginning of the day. I mean, we gapped up and went sideways. We were looking pretty decently bullish at the beginning of this 950 candle, right? We went sideways for like 20 minutes. We were a little inside 5. The IWM was leading up. EDMA kind of catches up, and then you're looking for this continuation here. So we're looking pretty good. And again, IWM really the leader here. Quick price correction into the ADMA, snaps back, makes new highs right away, inside 5. I actually didn't want the leadership from the IWM and made me nervous because the IWM was the most extended on the daily charts, which we'll take a look at in a second. What I've been looking for from a bullish perspective the last 2 days, and I was able to get a little bit of it yesterday, I did not get it today, was actually outperformance from the Qs, even if that's generally not what we want, right? Generally what we want for bulls or for bears is for the IWM to give leadership. In this case, obviously for bulls, we've gotten that for a while. You can see that on the daily chart, the outperformance on the IWM. I've been talking about it every day. But that also meant that it was the most extended. I keep doing this thing where I'm looking at the indices in comparison to the November-December range that we were in. And again, you had the IWM basically get just about to the highs, the resistance of that range, SPYs to 400, which was like the midpoint, and Qs, which were weakest, to 280, which was like that kind of lower band that we actually broke down from. So you can really see the outperformance from the IWM compared to the Qs there. That's why, from a bullish perspective, if I'm looking at a market that's extended, there's extended markets need to correct. So first of all, an extended market can always become more extended, and we weren't so extended that it was raising real red flags for me. But eventually, an extended market's going to need to correct through time or price. So what I said yesterday morning, what I said this morning, is that another day of sideways price action in front of 400 with maybe a little more mean reversion with Qs playing catch up to IWM would probably be one of your most bullish cases that you could come up with today. Obviously, it's not what happened. We got up to that SPY 400. And Pat called this great, by the way. He's like, yeah, they're going to shake out this 400, and that's a shorting opportunity. And they did exactly that. They ticked us through 400. I know Pat called out that short. Josh was all over the short side there too. I was, looking for more. For me on the short side of the market, I would always rather miss it than be early personally. And I was worried that it was a little early still because we didn't have that deeper upside extension that I was really looking for. But Pat and Josh nailed it. Heavy technical pullback here. This 10:15 a.m. candle was really important because it's like the first kind of breakdown candle. And that IWM still was able to fully negate it. So the IWM was still kind of giving us the all clear sign, breaking new highs there, but still the most extended on the daily, so it's tough to get real IWM continuation. SPYs and Qs were not able to do that, and Qs at that point were actually the weakest. and then we got a lower high, and then we got, you know, breakdown to new lows, and then we got the gap fill, and then we just got a pretty vicious downtrend intraday here, which really price corrected us down pretty far. Turning back over to the daily charts, the SPY has fully price corrected, and this is one of the things that I'm actually struggling with right now, is these little differences on the market with this pullback with the SPYs, Qs, and IWM. The pullback in the SPYs here is obviously pretty vicious. It brings us to between the space between the 8 and 21 EMA. So it is still just a technical pullback of a strong move into the equilibrium area. As a matter of fact, if you are bullish, this is like a potentially viable dip. Usually you don't want to do that, and I said that at one point today. Usually you don't want to be looking for that on day 1 of corrective action. Usually it's like a day 2, maybe even a day 3 thing, where you get, you know, corrective price action for a day and a half, and then you get a pivot low on that day 2, and then you're able to pivot back up. And where you want that pivot low to occur on the day 2 is like that space between the 8 and 21 EMA. And it's not perfect. They can overshoot it. They could overshoot the 21. But the issue here is I'm looking at the SPYs closing at lows today, but they're right at the spot where I would actually want them to pivot back up, or pretty close to it. And they look like they need to go lower still, because today was just day 1 and we closed on lows. Yeah, again, you know, you could correct a little further to the 21 EMA. You could even overshoot the 21 EMA, pivot, come back up, and still have that be healthy. I really don't want, from the perspective of a bull, the SPYs to really lose 390 again on a closing basis. You know, again, if we want to trade through it tomorrow and trade down to, you know, 189 or 188 and create a pivot and close at 390 or better, fine. That would still actually be healthy and intact. But you really want, like normally, the market to pivot pretty much right here. It's just that we weren't that extended. And that was actually, I think, the difficulty with the big picture game plan for both yesterday's trading session and today's trading session, is that it felt like we were due for a technical pullback, but we also weren't so extended that we couldn't continue to go higher. So it was like, you know, 405 SPYs is really where I wanted to begin to short, and then a pullback to the 80 EMA is where I'd be interested in potentially buying. But opening up at SPY 400 when you're $5 extended is kind of like no man's land. Not so extended that I was feeling confident with the short, but extended enough. And after a really big up move here over the course of the last 7 trading sessions or so, that you know, it's a little too early to buy, a little bit too early to short. Basically, is what I'm trying to say. So we got this corrective price action here to the space between 8 and 21 EMA, which is ideally where I'd want this market to pivot back up, but it looks like it needs to go lower. But you look at the IWM and the Qs, and as gross as today is, it's kind of a bearish engulfing candle. It doesn't even get you down to the 80 EMA for the IWM. So that same thought process on where I'd want the market to potentially pivot on this is like more normal to me. You know, big move here, heavier extension into resistance. Give me a day and a half to 2.5 day pullback where I'm pulling back to the space between the 8 and 21 EMA. Get that higher low in that area, and then work your way back up. That's what you want to see from a bull. And for the IWM, it's certainly still there. The market should not go straight up. They should, you know, have some give and take. They should be able to pull back here. And then the Qs are giving me a bad print here, so I have a false tail. But the Qs are like kind of somewhere in between what I'm seeing with the SPYs and the IWM. Whereas, like, again, that IWM could give me that day and a half to 2.5 days correction, get to the space between the 8 and 21 EMA, still hold major levels and pivot back up. The Qs and the SPYs are already there. The Qs aren't quite there yet, right? They're not even to the 80 EMA. They're not even to that upper band of equilibrium. But they're also the weakest index coming into this. So that the fact that they lost that 280, you don't really want to lose that 280 if you're a bull and you're looking for some of that mean reversion stuff that I was talking about. Not the end of the world, you know, didn't even correct down to the 80 EMA. Again, it feels to me like it's somewhere between SPYs, which are worst, and IWM, which is kind of best. So we'll see. You know, closing at lows today would certainly indicate that we do see a little bit lower before, again, even, and this is just on what I'm consistently talking about right now, by the way, is your best case scenario. I could talk about the worst case scenario too, but your best case scenario, I still think, is actually that we break today's low, pull back deeper into that equilibrium zone for the IWM and the Qs, and create a pivot point. I'm just worried, what does that actually do to the SPYs? If I get this IWM that needs to pull back another, $3 to 181 or something like that to then give the pivot, are my SPYs then completely broken? Are they having to retest 386? 386 is the line in the sand for bulls, for SPYs. It really shouldn't retest it, but that's going to be your line in the sand for shorter time frame bulls in this market, is holding that 286. And if I get that deeper price correction on the IWM, then maybe I am looking at SPY 286, and I would argue that's actually too deep of a pullback. So we'll see how that plays out. Dow, which I don't typically look at, is actually giving us another different picture. I don't like to look at the Dow. It's just not enough companies. I don't think it really gives you a good understanding of the market, but it's been such a leader recently. I think pretty recently it was just like 5% away or 5.5% away from like making new all-time highs. It was like pretty much right there. But the Dow, which has led us, really broke down first and hardest. I actually have no problem with that. This is completely overshot anything that you would want the Dow to hold. Overshot that equilibrium area for the moving averages. Overshot where the range. I'm sure everyone remembers, if we pull up the SPY, this whatever this was, 13-day range that we were in, that we finally broke out from. The Dow actually has even lost that level already. So, but I actually don't mind that. That kind of goes back to the mean reversion stuff that I was talking about. That the Dow has so dramatically outperformed. You can look at your Boeing chart, or Goldman before the earnings report came in, or pretty much any of those names, Cat, Deere. I forget exactly which ones are in the Dow because I don't follow it, but these names have just been so strong. But to see a little mean reversion with the Dow relatively weak, and then the Qs playing a little bit of catch up, I'm actually totally fine with that. Dow's down 1.9% today, so a little bit weaker. And again, that's obviously your bull case. Your bear case is this was just another bear market rally amongst many that we've seen over the course of this bear market, along the way to getting some people faked back into the long side of this market as we further deteriorate into earnings, and we'll re-lose the levels that we broke out from. This is another bigger picture lower high. This potential lower low that I've discussed a lot eventually gets broken. I said 386 is the line in the sand for small time frame bulls. I'm going to say that this 375 is the line in the sand for anyone that's big picture and is trying to be bullish, which is a difficult thing to do because we are still within the confines of a big picture downtrend. But the way that big picture downtrend breaks is that it starts with this higher low market. So we'll see how it plays out. Let's see how we gap tomorrow. A gap up would not be something that you want to buy, I don't think. I think that this low needs, again, that bullish best case scenario. Even with the best case scenario, I think today's low needs to break in order for us to pivot to be able to go higher. So a gap up tomorrow would be something that you do not buy, something that you potentially even short. And a gap down tomorrow, you got to see where we gap down to. A gap down tomorrow could make a short-term buying opportunity. It's still a little bit tricky just on the morning after the first day of a correction. And if we have a flat open, then it's gonna be tricky. A gap up would be nice for short-term shorts. A flat open, you can't buy it. Shorting it's probably not going to be the best risk reward. So we'll reassess that. Did it just get blurry right now, or was it blurry the whole time? Anyway, we will. Interesting. Well, I'm in a crazy cloud. We'll reassess that. They never sent me that part that they were going to send me either. Anyway, we'll reassess that in the morning. That's all I got on that. From a trading perspective, yeah, not too much. I think there was a few good longs early in the day. Pat and Josh with the short at highs was fantastic. I think that this was mostly about getting out of the way on the downside. There are a couple of places where you could have tried longs, maybe on this gap fill, maybe on this little hammer. But for the most part, it was about being out of the way on the way down. And then there was some other, deeper shorting opportunities, like with this bear flag. Remember this bear flag building out, let this 15-minute catch up a little bit. I know Cold Smoke was all over the bounce back shorts, which is great. And we'll see. I think for now I'm still saying that this is corrective price action of a big bull move. But this could deteriorate if we repeat this tomorrow. Then it potentially becomes a bigger problem. So we'll take it as it comes. That's pretty much all I got. I really don't have any individual name. I'll take a look at a couple individual names real quick because there's a few charts out there that I think look fine. I think it was notable actually that some of these FANG stocks, even though the Qs were pretty weak, some of these FANG stocks held in really well and were hugging around that flat line for a lot today. Apple did end up closing down, but it was really hugging that flat line for a good bit today, and it's down less than the market. Amazon ended up getting sold a bit into the close, but this daily chart still looks plenty fine to me. And this was another one that was holding around that flat line and ticking green for most of the afternoon, even when the market was continuing to sell. I thought that was notable. And Google was actually the other one. Google was looking for a continuation long through 92. It tried to do that this morning, but then the market certainly made that fail. But this pattern still looks fine to me. This was another one. It's down 0.25% on the day. That's what the sell-off into the close. It was really hugging that flat line. And that goes back to more of what I want to see about a little bit of mean reversion with some of this tech compared to like some of those down names. So I think it's notable. Let me take a quick look at what energy ended up doing. They ended up fading this energy. XLE was so strong off the open. It's almost back down to the $88. XLE was so strong off the open, and they eventually got to that as well. I think it's notable the dollar move. This is one of the things that's actually making me most nervous right now is the dollar. It keeps seeming to me like if you look at what the VIX did and you look at what the dollar did, that the market actually should have been able to go up significantly more than it did on the recent rally. And by recent rally, I really mean over the course of December and January. And it hasn't. The market's been able to be weaker than I think either the dollar or the VIX would indicate that it should be. And it's a big concern to me because whenever I'm looking at those types of situations, I always got to think about the other side. Well, it's like, wow, the market's struggling to rally even with the dollar just getting, kind of wrecked here and continuing to trend down. What's going to happen when eventually you get that bigger bounce in the dollar? Market weakness could really, really come in. And I think that we're starting to get to the point where we're due for a bigger bounce in the market. And yesterday's price action, in the market for the dollar. Yesterday's price action and today's both indicate that as well. We had like 2 red to green days in a row here for the dollar. A big rally off lows. We've really pulled back in this down move from highs back to the area that I thought would be like a pullback that would be really, really good for the market. The dollar should give a bounce back here at some point. And again, if the market has not been able to be as strong as the dollar has been weak, what's going to happen if the dollar actually gives a real further bounce back? That would be a big concern for bulls. So anyway, that's all I got. Happy to take a look at what you guys got. Meta still looks good. I think Meta still looks good too. I think Netflix still looks good. A bunch of those names. What does NVIDIA look like? NVIDIA got too extended to the upside. The thing needs to relax. AMD needs to relax a little bit too. Like a lot of those tech type charts of these really important names that we're paying attention to actually look fine to me. Microsoft may be actually in some ways the worst right now. But we'll see how that plays out. All right, I'm going to scroll up here in the VTF and look for questions that I may have missed. Going back to about 4 o'clock. First thing I'm really seeing is from Dave S. at 4:14. Hope an options question is okay. I wanted to ask about the new zero DTE, zero data expiration phenomenon in the SPYs. Did that Q order pay that happened like 5 minutes into the close? It looks like it did. what was it? It was QQQ puts for 278 with like 5 minutes into the close. I know that the options market there, what's it open till 4:10, 4:15, so they get a little bit extra time. But those guys got paid. Anyway, back to your question on the zero DTE phenomenon. Do you think this is affecting the market from an opportunity finding risk-reward perspective? And if so, is this worth looking into as a good vehicle for finding trades? One example would be the 394 puts, which you could have bought for 4 cents and closed at 248 today. Yeah, so the rise of 0 and 1 day to expiration options in the market is certainly having an effect on how the market moves from a market dynamic perspective. And it certainly, I think also, if you understand it, helps to breed opportunity. And that's why we're paying so much attention to it, right? It's been kind of incredible how consistently accurate that 0 DTE chart is that Bill K posts in the morning, right, as we're kind of doing the morning meeting. Like, not perfectly accurate every day, but I think like overall it's been pretty solid, especially with early day price action. It deteriorates a little bit into the afternoon. But do I think it is affecting the market from an opportunity finding and risk reward perspective? Yeah, I do. So that's why you want to pay attention to that flow. I mean, look, I'm still gonna stick with my. I'm not ready to change my entire approach to markets based on it. I'm still gonna stick with it as a layer of probability for trades that I otherwise find. But it's something that I've really noticed, and it's only increased, but over the course of the last several years, and especially over the course of the last year or so, that when we see that consistent flow in one direction or the other, you really don't want to fight it. And ideally, you're on the side of it. So today we saw a lot of bear flow hitting the market. The market got, hit pretty hard. Did not see a ton of bull flow consistently coming in. And then again, when it comes to individual names, whether it's one of the indexes themselves, index ETFs, or an individual stock, that's been another one that, when we see an individual name with consistent flow in one direction or the other, we very regularly see the market follow through with it. So yeah, you want to pay attention to it. I would still just utilize it personally and primarily as like a layer of probability, as information that you want to be taking in conjunction with the trades that you're actually putting on for the market, where you're not fighting that stuff. And I'm still not going to take that as a trade in and of itself, but you got to pay attention when the flow is very consistent in one direction and one name. You got to pay attention to it. And then Pat recently in the mornings has been posting that chart of names that are having the most amount of open interest change. I think that's a good one to look at in the mornings as well, and just kind of see where that's come in and utilize that as a layer of probability as well. So I hope that's the answer you were looking for, or at least helps. Next one I'm seeing here is from Cameron. Can you talk about when to re-enter a trade? I got short UAL at 10 a.m. Oh boy, they did hit that all the way down. You got short UAL at 10 a.m. after the inside bar broke. I'm assuming that's this one, the 955 bar break, so you're shorting at 10 a.m. You got stopped out at 10:20. Okay. On the way back up. It's fine. This ended up being a nice short here, but I struggled to re-enter after the pivot broke. Sure. So for me, this is a very straightforward answer. I re-enter trades when there's a new trade setup. If there's no new trade setup, I don't re-enter the trade. I have to have the new trade setup. If I had a stop loss in place, the stop loss gets triggered, I do not get back in unless there's an entirely new trade setup that presents itself. If you get stopped out of a position and you just re-short it because you're like, I know that I'm right, and you just re-short it or whatever, that's a recipe just to exacerbate losses. Those losses are going to get bigger. You're just going to churn stock, which is also not good. It's not a good recipe. You don't want to do that. So for me, my rule, and this helps me limit fighting stock, which for me, actually, that was a problem for me with my own trading. At this point, it's probably been fixed for 6 or 7 years. But, you know, I remember back, I guess, 6, 7 plus years ago, that I used to do that too often. I get stopped out of something, you know, it immediately ticked in my direction. I know my idea is right, and like kind of get back into the trade. I think it's the wrong thing to do. I would rather get shaken out of a trade, you know, I'm sure to get shaken out of the absolute high, and then have the thing plummet all the way down to zero with me not in it. I would rather that happen than me just kind of willy-nilly get back into a position after I get stopped out. So the key is to have a new trade setup. So if we're looking at UAL as a chart, the question is, was there a new trade setup anywhere after you got stopped out that you could have gotten short? So you take your first trade, you know, bounce back inside 5 and down. I think it's a decent trade. You get stopped out. A lot of volatility here with the name for obvious reasons. You know, earnings report that I thought was excellent, but it's actually super extended. So what's going to win? Is it priced in? And is that extension going to cause the stock to pull back? Or what? And obviously it did pull back, but there's no setup here. If this is not an inside 5, I'm going to say there's no setup. It's not an inside 5. No setup here. Maybe this. I like this as a short. This is like an inside bar that's like a continuation shooting star as an inside candle. So you can implement a little bit of candlestick analysis sometimes into your inside candle trades. So you could say that this was setting up for continuing 2 big red bars in a row, bringing the stock down to lows. It takes a quick pause, but they can't even bounce this thing. It tails right back down all within that inside candle. That's setting you up for, I think, further downside continuation. I wouldn't call this an A-plus trade because it's kind of right in the gap fill zone. It's not quite near lows. There's also a chance here, especially given the time of the day, that this now just turns into sideways choppy action and you take another loss here. So I wouldn't call it an A-plus trade, but considering that the market was breaking down, the stock is extended, I would argue based off that earnings report that it shouldn't even be down to this price to begin with. You're getting that kind of inside 5 shooting star for continuation. You could take that trade. So there's a trade here maybe, but nothing that I see at this pivot. I would not be shorting up here at this pivot. And that's pretty much it, to be honest. I mean, I like this as a short just generally for downtrending charts. Snap back to equilibrium and you get either a shooting star, which would be a continuation shooting star of the downtrend, or you get an inside 5 and down in equilibrium. Those are the 2 main trend continuation trades that I look for, and that spacing should be in that equilibrium zone. That's exactly what you get here. Snap back to equilibrium zone to the 21 EMA, inside 5 and down. So this is just a good general setup that traders can pay attention to. I don't love the time of the day. That's pretty much it. So, you know, you shouldn't kick yourself if you see a stock go all the way in your favor and you were in the direction of it, but you got pushed out. You shouldn't kick yourself if that happens and you did all the right things and you followed your rules and you did exactly what you're supposed to do. It just is, you know, part of the game, and taking those trades that are good trades, even if you get shaken out of them and the thing works, that's how I think you're going to make money consistently in the long run. So I think you did a good job. Cool. No problem. Let me check on the YouTube if there's anything in there. Some spam robot. Doesn't look like there's any questions, just a spam robot in there. The smallest time frame that I use from Galena is the 5-minute chart. And I rely on the 5-minute chart a lot. But I don't look at 1-minute charts, I don't look at 2-minute charts. I love looking at 5 and 15-minute charts for execution in conjunction with the daily chart. The daily chart tells me what I want to do. The 5 and 15-minute charts tell me how I do it, if that makes any sense. Like that, the daily chart tells me what direction I want to be on, where the big picture setup is, where I think the better risk reward is. The 5 and 15-minute chart tells me the how on the actual execution, where I can get in for good execution pricing and you know, lower risk opportunities for potentially higher reward. So, good question there as well. What's up, Robert? Anybody else have anything for today? Otherwise, we can wrap up a shorter one today, and we'll just see how we gap tomorrow. No problem. Okay, so I guess we're wrapping it up. Have a great evening, everybody. See you all tomorrow morning. We'll assess other market gaps. We'll come up with a game plan, and we will do our best to approach the market in the most profitable manner. So if you're watching on YouTube, give me that thumbs up. I appreciate it. And everybody have a fantastic night.